Welcome to UK Property Info. Last month, something happened that instantly destroyed the value of thousands of UK homes. No construction work, no physical damage, no change to the properties themselves. Just a quiet update to a digital map that most homeowners have never heard of. If you own property in the UK, you need to understand what happened and check whether your home was affected, because the consequences are severe and they are permanent. If you find value in this video, hit that subscribe button right now, because I am exposing information that property owners desperately need but almost never receive. Here is what happened. The Environment Agency and various other government bodies maintain detailed risk maps covering the entire United Kingdom. These maps assess every property for multiple types of risk, including flooding, coastal erosion, ground instability, subsidence potential, and increasingly climate change vulnerability. These maps have always existed. What changed is the methodology, the data sources, and the classification thresholds. And when those changed, millions of properties were instantly reclassified from lower risk categories to higher risk categories. That single change, that one update to a digital database, immediately affected property values, mortgage availability, insurance costs, and saleability for every property that moved into a higher risk zone. Let me explain why this matters so much. When a lender considers offering a mortgage on a property, they assess the risk that the property might lose value or become damaged during the mortgage term. They access these government risk maps as part of their valuation process. If your property sits in a high-risk flood zone, many mainstream lenders will simply refuse to offer mortgages. Others will require specialist flood insurance as a condition. Some will reduce the loan-to-value ratio they are willing to offer. All of these responses reduce the pool of buyers who can purchase your property and reduce the prices those buyers can afford to pay. A property that was worth £300,000 in a low-risk zone might be worth £250,000 or less in a high-risk zone, purely because of how that zone classification affects mortgage availability. The flood risk maps are the most significant, but they are not the only ones that matter. Coastal erosion maps now predict which properties will be affected by cliff collapse and shoreline retreat over the coming decades. Some properties that were considered safe 20 years ago are now mapped as likely to be lost to the sea within 50 years. Those properties have become virtually unmortgageable because no lender wants to secure a loan against an asset that might physically disappear. Ground instability maps identify areas prone to subsidence, landslip, and ground movement. Properties in high-risk zones face insurance difficulties and lending restrictions. Mining risk maps show areas affected by historical coal mining, where ground collapse remains a possibility. All of these classifications directly affect property values and mortgage availability. The recent updates were particularly devastating because they incorporated new data sources and modelling techniques. Climate change projections were integrated into flood risk assessments, meaning that areas which have never actually flooded were reclassified as high risk based on predictions of what might happen as weather patterns change. Satellite data and LiDAR surveys provided more accurate elevation information, revealing that some areas previously considered safe were actually lower lying than old maps suggested. Historical flood event data was expanded to include more minor flooding incidents that previous assessments had ignored. The cumulative effect was that the new maps classified far more properties as high risk than the old maps did. Nobody told the affected homeowners. There was no letter through the door, no email notification, no public announcement listing which postcodes had been reclassified. The maps were simply updated on government websites, and suddenly properties that had been classified as low or negligible risk were showing as medium, high, or very high risk. Homeowners discovered the change when they tried to remortgage and their lender flagged a problem, or when they tried to sell and the buyer's surveyor identified the risk classification, or when their insurance renewal arrived with a massive premium increase, or an outright refusal to cover flood damage. By the time most people found out, the damage to their property value had already occurred. I want to be specific about the types of risk that are now being mapped more aggressively than ever before. Surface water flooding is perhaps the biggest change. This is flooding caused by heavy rainfall, overwhelming drainage systems, rather than rivers bursting their banks. Surface water flooding can affect properties that are nowhere near rivers or coastlines. It can affect properties on hills. It can affect properties that have never flooded in living memory. But if the new modelling predicts that a property could experience surface water flooding in a severe storm event, that property is now classified as at risk, with all the mortgage and insurance implications that brings. Thousands of suburban properties that owners considered completely safe have been reclassified purely based on surface water flood modelling. Coastal erosion mapping has become dramatically more aggressive. The old approach essentially drew lines based on current cliff positions and historical erosion rates. The new approach models how erosion rates might accelerate as sea levels rise and storm intensity increases. Properties that were mapped as safe for the foreseeable future are now shown as at risk within decades. Some coastal properties have seen value reductions of 30, 40, even 50%, purely because of how the new erosion predictions affect their long-term outlook and therefore their mortgageability. Ground instability mapping has expanded to cover clay shrinkage and heave, which affects huge areas of southern and eastern England. As climate change produces more extreme wet and dry cycles, clay soils are expanding and contracting more dramatically, causing subsidence and structural movement in properties that had been stable for decades. The new maps identify far more properties as being in areas where clay shrinkage risk is elevated. This affects insurance availability and premiums, which in turn affects mortgage affordability and property values. Climate vulnerability mapping is the newest category and potentially the most far-reaching. These assessments look at how properties might be affected by future climate conditions, including extreme heat, water scarcity, and changing weather patterns. A property in an area predicted to experience severe water stress might face future restrictions on water usage. A property in an area predicted to experience extreme heat might face higher cooling costs or even health and safety concerns. These climate vulnerability assessments are increasingly being incorporated into mortgage lending decisions and property valuations. The insurance industry has been even more aggressive than lenders in using the new risk data. Insurers have access to detailed flood modelling that goes far beyond the publicly visible Environment Agency maps. They can see surface water flood risk at individual property level. They can model the expected cost of flood damage for specific buildings based on construction type, floor levels, and historical claims data. When the underlying risk maps changed, insurers immediately repriced their products. Properties that had been paying standard premiums suddenly faced quotes of thousands of pounds per year for flood coverage. Some properties received outright refusals, with insurers declining to offer flood coverage at any price. The impact on mortgage availability has been severe. Most mainstream lenders have automated systems that flag properties in high-risk zones. Applications for these properties either get declined automatically or get referred to specialist underwriters who apply much stricter criteria. Some lenders have blanket policies refusing to lend on properties in Flood Zone 3 regardless of individual circumstances. Others will only lend if properties have flood resilience measures installed and can demonstrate they have appropriate insurance coverage. For properties where insurance is unavailable or prohibitively expensive, mortgages effectively become unavailable too. The Flood Re scheme was supposed to help with insurance availability, and it does help many homeowners. But Flood Re only covers properties built before 2009. It does not cover buy-to-let properties. It does not cover commercial properties. It does not cover properties worth more than certain thresholds. And it does not prevent the underlying value impact that comes from being in a high-risk zone. Having Flood Re insurance means you can get covered, but it does not mean your property has not lost value due to its risk classification. What can affected homeowners actually do? The first step is understanding your current risk classification. The Environment Agency website allows you to check flood risk for any postcode in England. Similar tools exist for Wales, Scotland, and Northern Ireland through their respective environmental agencies. You can also access detailed flood maps showing the exact risk zones in your area. Check both river and sea flooding and surface water flooding because they are assessed separately and either can affect your property value. Check coastal erosion predictions if you are anywhere near the coast. Check ground stability and mining risk through the British Geological Survey and Coal Authority databases. If you discover that your property has been reclassified into a higher risk zone, you have limited options, but they are worth exploring. First, check whether the classification is actually accurate for your specific property. The maps work at a general level And sometimes individual properties have characteristics that mean they are actually lower risk than their postcode suggests. If your property is elevated above surrounding land, has flood resilience measures installed, or has other protective features, you may be able to get an individual assessment that results in a different risk classification for lending and insurance purposes. Second, consider whether flood resilience measures could improve your situation. Installing flood doors, air brick covers, non-return valves on drains, and water-resistant flooring can reduce the damage caused by flooding and may improve your insurance terms. Some properties have had their effective flood risk reduced through property-level protection measures, although this does not change the underlying MAP classification. Third, understand that time may help. The risk maps are updated periodically, and properties that are reclassified as high risk now might be reclassified back to lower risk in future updates if new data or modelling produces different results. Flood defence schemes being built by the Environment Agency and local authorities can also result in properties being reclassified once the defences are operational. This does not help you right now, but it means the current situation may not be permanent. For buyers, the message is clear. Check risk maps before making offers on properties. Do not assume that because a property has never flooded, it is not at flood risk. Do not assume that because it is not near a river, surface water flooding is not a concern. Do not assume that insurance will be available at reasonable cost. Check the actual risk classifications, get insurance quotes before exchanging contracts, and understand how the risk zone affects mortgage availability and future resale potential. A property in a high-risk zone might still be worth buying, but only if the price reflects that risk. For sellers, honesty is essential, but presentation matters. If your property is in a high-risk zone, you cannot hide that fact because buyers will discover it during surveys and searches. But you can proactively address concerns by having documentation ready about flood history, insurance availability, any resilience measures installed, and any planned flood defence schemes in your area. A buyer who understands the actual situation is more likely to proceed than one who discovers unexpected risks during conveyancing. The broader issue here is transparency and notice. These map updates have enormous financial consequences for millions of homeowners, yet they happen without any direct notification to affected property owners. You can wake up one morning and discover that your home has lost 15 or 20% of its value because of a database update you were never told about. There is no compensation. There is no appeals process for the map classifications themselves. There is no requirement for anyone to inform you that your property status has changed. The system treats property owners as passive recipients of whatever classifications are assigned to them. Climate change means this situation will get worse, not better. As weather patterns continue to shift, risk maps will continue to be updated. Areas currently classified as low risk will be reclassified as medium or high risk as projections are refined and new data becomes available. Properties that seem completely safe today may be flagged as at risk in future map updates. This is not scaremongering. It is the logical consequence of how climate models work and how risk assessments incorporate those models. The property market is only beginning to price in these climate risks. Currently, many buyers do not check risk maps before purchasing. Many sellers are unaware of how their property has been classified. Many transactions proceed without full understanding of the risk implications. But as awareness grows, and as lenders and insurers become more systematic about using risk data, properties in high-risk zones will face increasing value pressure relative to properties in low-risk zones. The gap will widen over time. What happened last month with the map updates was not a one-off event. It was a preview of how property values will increasingly be affected by climate risk assessments going forward. The properties that lost value when the maps updated are not going to recover that value because the new assessments reflect genuine risks that affect mortgage availability and insurance costs. More properties will be affected in future updates as risk modelling continues to evolve. Thanks for watching UK Property Info. If your property has been affected by risk map reclassifications, or if you are concerned about how climate risks might affect your property in future, share this video with other homeowners who need to understand what is happening. Knowledge is protection in a changing climate. Stay informed, check your risk status, and I will see you in the next one.